Hi guys, I wanted to take a look at Euro USD because I was watching at the 4 hour and it was not too clear for me. So I wanted to break down what exactly happened on the 4 hour because clearly we are in a market maker buy model, sell side of the curve, buy side of the curve. And what exactly happened here on the 4 hour? What were the signs for the bullishness? So first of all, what we always do, of course, is we want to locate the last phase of distribution. And for me, that is this area right here. It took out this minor high, and then it took off to the downside. And if you look down here, where did price react to? Well, it took out these equal lows right there, and at the same time, it respected the fair value gap. And I think it might even respect the consequent encroachment. Yeah, look at the bodies, look where the bodies are closing. That's important. So the bodies are respecting the consequent encroachment of this breakaway gap, because this was never dated into. And breakaway gaps are known for their strong support once price comes back to it. But anyways, price came back here and then price just shoots away. So this was a first sign, maybe, that price wanted to go higher and that a reversal was coming. Next thing that happens is this high taking out this high. For ICT, this is a market structure shift, but for us at IPTA, we would rather see a body closure above this high. Then what happened was we retraced back, but back to where? Back to this order block, you might say, but also this wick. And look at this wick. This candle is respecting the consequent encroachment of this rejection block, because that's what it is. It's a rejection block. Price is respecting the rejection block, and then later price traded back down and respected the body of the rejection block. So those are already a first few signs that price might be bullish or become bullish. Then price took out these highs and cleared out this bearish fair value gap right there, and was creating bullish fair value gaps on itself. Also here creating breakaway gaps, which is a sign of strength. Then price traded back into the order block and respecting the fair value gap. It's a little mohawk, but that's allowed, but the bodies were respecting the fair value gap and price then traded higher. Next, it created another, actually a propulsion block. Why is this a propulsion block? Because it traded back into this order block right here. So it tapped into this order block and price shoots away. That's a propulsion block. Also the second stage of delivery, of course. Then price broke this high right here, took this liquidity, traded back, and this is more of a PPR if you ask me, right? Like this, balanced price range is now all delivered efficiently, and then price trades higher, creating kind of equal highs. If you look at the bodies, those are relative equal highs. That is very nice. That is a nice signature telling that the algo will come back to take out these equal highs. Then what happened was price traded back, but look at the manner how price traded back. This to me is a high resistance pullback. And where did it trade to? Well, we have a large wick, so let's measure this wick. And price was not able to touch the consequent encroachment of this big wick. So that is a sign of strength. And the second VD array, of course, is this order block, or maybe if you want to include the low, you can see price is staying in the upper half of the order block, which again is a sign of strength. Then price came in the buy program, quickly moved price, pushes price higher, and then finally created this bullish 4-hour fair value gap. And in here you see that price is playing around the weekly opened. So the weekly open was here and price is just playing around these areas. So let's dive into a lower time frame to investigate what happened over there. So here we are on the 50-minute, and the thing that stood out to me was this portion right here. Particularly this candle right there. And why that candle? Because it had a big wick, big bullish body. So let's see what that candle did. Well, obviously it took Asia low. But the other thing I noticed was this low right here. This low right here was not taken by this wick. So let's measure this wick and see what happens. Well, what happened was this big candle touches to the pip the consequent encroachment of this low right there, of this wick right here, and then closes back in the range. So this is telling me that the algorithm has no intent to take out this low, which of course is a bullish sign. Then price traded higher, then created another wick right here, but did not take out this one either. So again, a bullish sign. Created a fair value gap, closed in the fair value gap, but it respected the order block, or we might say rejection block. And look where the bodies are closing. The bodies are closing at consequent encroachment of this order block. So then price just took off and left a 50-minute fair value gap. Okay. In terms of the CSDs, where is the last phase of redistribution? I think this area right here. That looks like a distribution to me, and this here would be then the first change state of delivery. Price then stayed inside this trading range, this dealing range, low, high, taking out these highs, taking out these lows. So price was trading inside that range right here, and finally price broke out right here in the second change in state of delivery with a fair value gap. So let's dive a little bit deeper. Maybe I'm not sure what we can see here, and I'm on the 3-minute now. So yeah, that was all. This price action was during London. So if you would have seen all this, you would understand all this. This was a 15-minute, I guess, 15-minute fair value gap. Right here. Price is expecting all that. So where would be the change in the state of deliveries? Well, I would say, let's see, I'm not very sure, but this high is the one that you want to see broken, I think. So this happens right there with speed, and that's also very nice. Then you got speed again. Price touches, I'm not sure this is already created, but anyway, here's your second change in state of delivery. So therefore you might say you go wrong from this here, oh, it's the wrong one. You go from here to here. What would be a target? Well, for me, you could use 126 to use this high that created all this downward movement. You could target the previous month's high, the equal highs, or this Asia high right there. Yeah, there are some highs that you can pick. So anyways, for me, this would be the second change in state of delivery. But yeah, this is during lunch, and just at 7 o'clock here in New York, you could have taken this trade, and I think it's a valid trade. Yeah, so that's my breakdown of EU. Thanks.